Okay, thanks everyone. Thanks, ladies and gentlemen. I think we're ready for our main event. So, to introduce Jake Klein, can I please ask you to welcome Colin Sprott, Principal Mining Engineer at AMC.
Thanks, Sam, and good afternoon. Jake Klein is the Executive Chairman of Evolution Mining, a leading growth-focused Australian gold company which he and his team established in 2011. Today, Evolution is Australia's second largest ASX-listed gold producer with a market capitalisation of approximately 4 billion Australian dollars. And over the past 18 months, the Evolution team has completed 3 significant asset acquisitions, 1 public company takeover, and divested 1 of its assets. In financial year 16, Evolution produced 803,000 ounces at an all-in sustaining capital cost of $1,014 Australian or $739 US per ounce, placing Evolution firmly in the lowest quartile of global gold producers, and generated $628 million Australian in operating cash flow from its portfolio of mines. Jake was previously a founder and CEO of Sino Gold Mining, where he managed and developed that company into the largest foreign participant in the Chinese gold industry. Sino was listed on the ASX in 2002 with a market capitalisation of 100 million and was purchased by Canada's Eldorado Gold in late 2009 for more than 2 billion. It was during this time with Sino that Jake last spoke to this audience. There's a bit of background. Jake was born in South Africa and grew up in Cape Town. He went on to higher education at the University of Cape Town, where he completed a Bachelor of Commerce degree with honours. After qualifying as a chartered accountant and gaining some practical experience, Jake hit the road in his early 20s and backpacked around Europe. Sydney was his final destination on this journey and is a place that he's now called home for over 25 years. Jake's first job in Sydney was with the Macquarie Bank, where he worked in the Internal Audit Division, and it was here that he ended up on the commodities desk, assisting clients with gold hedging, which got him his introduction into mining in China. He is a sporting enthusiast who played rugby in his schoolboy days and has competed in numerous marathons and triathlons. And Jake does believe a lot can be learnt from great sporting teams whose winning habits can be applied to the corporate world. The All Blacks are therefore admired and studied for educational purposes, but he does insist he does remain a faithful Wallabies supporter. Jake does consider his greatest success being his family, being his wife Debbie of over 25 years and his 2 adult children Samantha and Zach. Members and guests, would you please make welcome Jake Klein to the Melbourne Mining Club.
Thank you, Colin. Salvi Parbo, Richard Morrow, distinguished guests, friends and colleagues of the mining industry, good afternoon. Thank you for the opportunity to present at this prestigious forum. What a huge honour it is for me. This is the second time I've been invited to address this audience. The last time was a little over 7 years ago, on June the 4th, 2009. A lot has changed since then, both professionally and personally. A stark reminder for me is that when I last spoke to you, I recall being referred to as an up-and-coming executive in the gold industry. Now I've seen myself referred to as a gold industry veteran. I have a huge amount to be thankful to our industry for. I often consider myself to be a somewhat accidental, albeit very fortunate miner, having started my career in Australia as a chartered accountant in internal audit at Macquarie Bank almost 25 years ago. The uniqueness of the gold industry is captured in so many of those life-changing moments I've had the good fortune to experience. Maybe because it is such a global industry, it offers such superb personal and professional opportunities. From the wonderful viewpoint I had to witness firsthand the challenges and opportunities of China's opening while working with my pioneering colleagues at Sino Gold, building the first foreign-owned gold mines, to my meetings in Australia with the traditional owners, which are particularly poignant and meaningful to me, given my upbringing in apartheid South Africa, to my fascinating and stimulating engagement with one of Egypt's most successful businessmen, Mr. Naguib Sawiris, who is now Evolution's largest shareholder. I can even say that this year, for the first time in the 155-year history of the Melbourne Cup, the winner will be handed a cup that has been crafted entirely in Australia with gold supplied from our very own Cow mine in New South Wales. I couldn't have wished for a more interesting or exciting career so far, and I hope the best is yet to come. So I thought I'd use my time today to reflect on and share some of my perspectives on our industry, and what better way to start than with the commodity we produce, gold. I think John Thornton, the chairman of Barrick, put it well when he made the simple but very powerful statement that gold is here to stay. There do seem to be some very compelling reasons why this statement has never been more true. The reality is that little seems to have changed since the global financial crisis in 2008. Central banks have printed money to buy time for governments to get their fiscal houses in order, which most have not done. Our country, in many ways, typifies this. You only have to look at the current debate on the current political debates on budget repair. It seems that the only thing everyone can agree on is that it is desperately required, and not only in the national interest, but a national imperative. After that, no one can agree on anything, and it has become the proverbial political football. We run the very real and not insignificant risk that our future economic prosperity is jeopardized as we become paralyzed over petty political point scoring. Australia is not alone, and until global economies can address the underlying systemic reality that we are all spending more than we can afford, it may be good for gold, but not much else. Since the GFC in 2008, there have been more than 600 rate cuts by central bankers. We find ourselves in an unprecedented low interest rate environment. Yet in spite of this, market participants seem obsessively focused as to whether the US Federal Reserve will increase interest rates by 25 basis points, or 0.25% at their meeting in December, which would be only the second increase in US interest rates since the down cycle began in 2007. Unlike other commodities where there was a huge supply response to increased Chinese demand, gold continues to get harder to find and more expensive to mine as discoveries get deeper and grades decline. It is incredible to think that we produce more iron ore from the Pilbara every 90 minutes than all the gold that has ever been produced in history. The demand side is equally compelling. Developing countries, including China, Russia, India, and Turkey, have been consistently accumulating gold in recent years, and yet still hold a low percentage of their reserves in gold when compared to the 60% or more in places like the US and most of Europe. Even if you assume, probably with some basis, that central banks cannot and will not get their collective act together to respond in a sensible and prudent way, institutional and private investors will continue to lead the way, and they've shown that. Investment demand has been a major driver of the gold price this past year, and investment in physical gold ETFs has now climbed back above 2,000 tonnes. Of course, this analysis does not take into account the very fragile geopolitical environment we currently live in. Hardly a week goes by without some horrendous and tragic terror attack. Several civil wars continue to redefine country borders, and serious political fault lines appear to be growing on a daily basis. And whilst no one outside of Fox News seems willing to contemplate or even acknowledge it, the reality is that come November, Donald Trump could well be the next President of the United States. And in spite of the correction in the gold price over the past 48 hours, which has been much spoken about in the media, it is worth noting that the US dollar gold price is still almost 20% higher than it was at the start of the year. An interesting follow-on question to these macroeconomic circumstances is, what will this mean for gold equities? Although in many respects we are experiencing an unprecedented set of global economic circumstances, we do still operate in a cyclical industry, so history provides a very important perspective. During the past 45 years, there have been 7 bull markets and 7 bear markets for gold, with varying lengths and percentage price changes. On average, from the bottom of a bear market to the top of the bull market, gold equities have risen approximately 500%, and the better cycles have yielded returns of up to 760%. Since the start of 2016, gold equities have, on average, risen by more than 100%, and many are up more than that. So if we are in a traditional bull cycle like the last 7, and I don't see any reason why to believe that we are not, there is still likely a long way to go for gold equities. So you may well ask, what does this favorable environment mean for gold companies? And this is where things get a little more complicated. Even though we can be pretty confident that gold is here to stay, and the outlook for gold equities is encouraging, the bad news is that if you work for a gold company, it doesn't mean that it is here to stay. In fact, the odds are against it, especially if it's an Australian gold company. If you look back 24 years to 1992, when I started my career in the mining industry, these were the 10 largest ASX-listed gold companies. The gold price at the time was $333 an ounce. The Australian dollar averaged around 73 cents. So the Australian dollar gold price was around 450 Australian dollars per ounce. Interest rates on a home loan at that time would have cost you around 11% per annum, more than double what you would pay today. So of the top 10 gold mining companies listed on the ASX in 1992, only 2 of the 10 are still listed as companies of substance. 1 is suspended with a very uncertain future, and the remainder have disappeared or morphed into other companies. Let's see how the gold companies that were around when I last spoke here 7 years ago have fared. At this time, the US dollar gold price had risen to 982 US dollars an ounce. The Australian dollar was trading at 80 US cents, and Australian producers were getting more than $1,200 per ounce. Since that time, 4 companies have been taken over, 1 has been delisted, and there is the 1 that is suspended with the uncertain future. This leaves only 4 still actively traded today. Of these 4, if you look at the market capitalization of the gold sector today, only 3 remain in the top 10, and they occupy spaces 1, 6, and 7. That means positions 2 through to 5, and 8, 9, and 10 have all been filled by new entrants. Looking at this, I think it's fair to say that there's been a genuine renaissance of the Australian gold industry. Because if you exclude Newcrest, which is appropriately categorised as a major, Most of these Australian gold companies are of a size that would allow them to be called globally competitive mid-tiers and therefore be of interest to international investors. When you look closer at this new breed of Australian gold companies, there is an even more compelling story. While 6 of the 10 largest Australian gold mines, as measured by gold output, are owned by companies whose primary listing is not on the ASX, the cost curve tells a very different story. Remarkably, 9 of the 10 lowest cost mines in Australia are owned and operated by ASX-listed gold companies. This is a great tribute to the work these companies have done in making their mines more cost-efficient and profitable than the international participants have been able to. If this can be sustained, the future of our industry is very bright. So of this new, exciting group of Australian gold companies, which ones will be able to withstand the test of time and become enduring, sustainable, globally competitive mid-tier gold companies? Something that, as you have seen, has been very elusive for the Australian gold sector. Certainly at Evolution, we intend to be one of them. If you look at the key characteristics that enduring, sustainable gold companies have, ones that have been successful over the long term, companies like African-focused Randgold and Canada's Agnico Eagle, thriving when the gold price is rising and doing far more than just surviving when the gold price is falling. They seem to have the following 5 things in common. Firstly, they have efficient, high-quality assets that operate at low cost. They all have at least one cornerstone asset that anchors the company with a long mine life and lowest quartile costs. Secondly, they consistently discover more ounces at their operations and, at a minimum, replace mining depletion but often extend their already long mine lives. Thirdly, they consistently demonstrate financial discipline and have strong, uncomplicated balance sheets. Fourthly, they all seem to demonstrate resilience founded on a core people culture of belief and understanding of their company's purpose, vision, and values. And finally, and very importantly, they invest smartly. The holy grail of the resources industry is getting ourselves to the point where we are investing more on a counter-cyclical basis and returning more to investors on the upcycle. As you know, the resources industry doesn't have a great track record at this. Maybe because you have to be bravely contrarian to succeed in this area. In the upcycle, investors are urging you on to grow and invest more, and in the down cycles, boards and management teams seem to get paralyzed by fear to pursue anything growth-oriented. A cautionary tale is provided in what is often described as the once-in-a-lifetime resources boom we have recently lived through, when the 5 major diversified miners spent $211 billion on acquisitions. As this $211 billion today is more than the combined market capitalization of all those 5 companies. In a research report published in June this year, Macquarie estimated that those same miners incurred impairments amounting to at least $110 billion on these new acquisitions, or more than half what they had spent. The Australian gold industry sector has an outstanding opportunity in front of it. We stack up well against our international peers on all of those characteristics I described of enduring, successful gold companies, perhaps except one: mine life. The average reserve mine life of gold companies listed on the TSX is 15 years, and except for Newcrest, none of the 9 other largest gold companies on the ASX would have average mine lives of that duration. I believe this is a large contributor to the fact that ASX-listed gold companies make up a comparatively small proportion, being only 12%, of the GDX index of global gold miners. The importance of mine life is something we at Evolution have been acutely aware of, and it has been a key driver of our strategy since our formation almost 5 years ago. I do believe that if this can be addressed, and there is no reason to suggest it cannot, there is very little reason why Australia should not be able to build and sustain several globally competitive and enduring gold companies. At Evolution, we certainly recognise that whilst we are not there yet, it is a key driver for us to be an enduring, sustainable, globally competitive mid-tier gold company. Because the one thing we absolutely know for certain is that we operate in a cyclical industry. At the moment, the wind is at our back, largely, give or take the last 48 hours. But at some point, it will turn, and we want to be able to, at Evolution, be able to prosper even when the wind is blowing in our face. I am fascinated by Evolution's very clear strategic opportunity. It was visible when we formed the company in 2011, and it is still equally clear today. And the best thing is it is right on our doorstep here in Australia. We want to relentlessly focusing on improving the quality of our portfolio. Whilst our portfolio of assets now has an average reserve life of over 8 years, we would like to get to a point where each of our assets has at least an 8 to 10 year mine life in front of it. Importantly, with the recent acquisition of an economic interest in Ernest Henry and our acquisition of the Cow Gold Mine last year, we now have 2 cornerstone operations that each have the potential to have 15-year plus mine lives, providing us with a very important long-term strategic planning horizon. We recognise that the biggest opportunity for value creation is our existing asset base, but it also means that all options must be on the table. Acquisitions, divestments, and M&A, all looked at through the lens of whether they will improve the overall quality of our portfolio. You have recently seen evidence of our commitment to this through our divestment in our shortest mine life asset, Pajingo, and in the acquisition of the economic interest in Ernest Henry that will provide us our longest life, lowest cost ounces. I have said before that improving the quality of our portfolio is the religion at Evolution. Other than that, I do assure you we are non-denominational. The other thing we have tried to do is ensure that in each transaction we have undertaken, we've been able to articulate what value we bring to the transaction. Money alone is not a good answer to this question, as anyone can bring it. Unless you can articulate and be confident of the value you can add, and it is not always clear-cut, you run the very real risk of destroying shareholder value. Hoping that the market has not understood the value of a company and that you can add a 30% takeover premium and still generate value for your own shareholders has been a strategy fraught with danger and a path we have deliberately chosen not to go down. In the last 18 months, we have executed 5 transactions, and only one of them, the smallest, was an on-market public company takeover. In each case, we believe there was a unique value add that we were able to bring to the transaction for the benefit of our shareholders. For the 2 largest and most transformative transactions, Cow and Ernest Henry, it was a deleveraging necessity that motivated Barrick and Glencore to enter into the transactions. For Mungari and its former owner, La Mancha, which is now our largest shareholder, it was their desire to use their Australian assets to cornerstone a shareholding in a growth-oriented Australian-listed gold company. For us, it was the fact that we saw upside in an operation located in a world-class gold terrain that had been housed in a private company not focused on exploration. Importantly, and not to be underestimated, it also gave us access to an investor willing to support our bid for Cow with an investment of $112 million of additional equity, as given our market capitalisation at the time was about 660 million Australian dollars, this support was absolutely pivotal to our ability to submit a fully funded, unconditional bid of $707 million to Barrick for the Cow mine. A key driver to all our business development has been to seek out situations where our interests with the counterparty we were engaging with were complementary rather than competing. If you believe, as I do, that one of the key attributes of enduring successful gold companies, probably any company, is culture, then I hope this quote that I came across resonates with you. Two things define you: your patience when you have nothing, and your attitude when you have everything. It is true that very few of my colleagues would accuse me of being patient. I prefer to think of myself as being impatiently patient. As assets have changed hands in the past 5 years, we were able to be sufficiently patient, admittedly at times with a great deal of difficulty and stress, to wait for transactions that would truly transform the company, and I believe we have found them in the La Mancha, Cal, and Ernest Henry deals. We have undoubtedly been bold and courageous as we have gone about growing and transforming our business, but at the same time, I genuinely hope that we have been equally humble and respectful. Given our recent growth and new profile, we know we are entering uncharted waters for evolution, and we will need to be ever vigilant to not lose the very attributes that have made us successful to date. As Andrew Miller, our general manager at the Krakow Gold Mine, said, and I think it captures a core part of this culture we are building and we need to retain at Evolution: systems drive the big mining companies, people drive evolution. We do believe that people are the key differentiator of our company. This was true when we started the company with only 6 people and really little more than a clear strategy, and it is equally true today with some 1,600 employees and occupying the place as the second largest ASX-listed gold producer. A critical part of this is ensuring our people get home safely, and we are continuing to invest time and effort into improving our safety performance. We want people to feel and act like owners of the business. So what better way to do this than to make everyone an owner? And so for the last 2 years, we have given every employee $1,000 worth of Evolution shares. It has had a hugely positive impact. In addition, we have a rewards program to encourage and recognize ideas generated outside people's normal duties, people who are truly acting like owners. To date, we have had more than 60 ideas generating savings of more than $6 million per annum. But more importantly, it is about the underlying culture and values of the organization. That intangible chemistry that makes people proud of the place they work and willing to go the extra mile. At the heart of it, we want our people's time at Evolution to be a highlight of their career. We never want to take success or high performance for granted. Likewise, we want to differentiate performance and guard against lapsing into a state of complacency that has been the undoing of many a successful company. If we can continue to inspire, challenge, and engage our people, I'm confident of a very bright future for Evolution. In closing, I would like to end by dedicating this talk to the people who make the Australian mining industry great. That is partly you, the people in this room, but mostly it is the people right at this very minute, either underground or in open pits or anywhere on a mine site in Australia, who because of their dedication, work ethic and commitment keep our industry safe, productive and globally competitive 365 days a year. In particular, I would like to pay tribute to the 1,600 talented people who pull on an Evolution shirt every day and who I'm extremely proud to be representing and speaking on behalf of today. Thank you.
Thanks. I'm sure your presentation will spark some questions from the audience. Now, we will invite questions from the floor now for Jake, and if you want to ask a question, please raise your hand, and when you're handed one of the roving mics, stand and state your name and affiliation. We've got 2 roving mics. We'll start off over here with Sam.
Jake, Hedley Widdop from Lion Selection Group. Thanks for it. You always give a very entertaining and informative talk. So that was probably better than the Sino one 7 years ago, which was the first talk I ever saw here. But I enjoyed them both immensely. You've spoken about growth in evolution and in the gold industry, and I wonder if I could ask you to comment on how you will see that best taking place across the industry in gold in Australia, but equally within evolution. We've seen a spectacular trajectory from evolution and a couple of other companies in the space. The opportunities in Australia, just as an observer, seem to have been picked in many cases. So that presents a challenge, I guess, in terms of jurisdiction, particularly if you have a desire to grow or to invest in high quality assets still. But then there's also the question on, do you buy, do you develop, do you explore, and how do you partition across that? So evolution, Jake, or revolution?
Thanks, Hedley. That's an interesting question. I think, as I said, you've got to be open to all possibilities, but I think the path that has led this industry to tears in the past is one we really need to avoid, and that is growth for growth's sake. So I do think that removing ounce targets and not wanting to become a 1 million ounce a year producer, but driving efficiencies. So, where is the best value that we can add for shareholders? We need to keep asking. We don't rule things out or in. We look at opportunities through two lenses. Will it improve the quality of our portfolio? And is there a value trap or a value opportunity that we can see and identify and articulate? So, I could, if you came into my office, you would find 25 presentations from investment banks saying that Evolution should merge with one of our peers. And at the end of each presentation, I say to the investment banker, which is normally a very good presentation, I say, well, what's the market seeing that we're not? And if we have to add a 30% takeover premium to this, why are our shareholders going to benefit? And so we've looked for opportunities. Obviously, the Cowal acquisition was a time when Australian gold producers were distracted, or global gold producers were distracted. They were all deleveraging, but Barrick were deleveraging, and in some ways, we are incredibly fortunate that, to us, certainly, we would say they saved their best asset for last. We've been able to take reserves from 1.6 million ounces to 2.8 million ounces. We've got 7 drill rigs drilling there at the moment, and we really are discovering new mineralization. The Glencore deal was also equally interesting because we felt gold values were getting a little heated, so we needed to look for somewhere else. And we found Glencore as a motivated, engaged counterparty, and we were able to structure something which, frankly, in Barrick and Glencore's case, they are both happy with the transaction, as are we. So I'm not sure that answers the question, but it's certainly the way Evolution's going to be working through things.
Jake, I'm Sarah Boko from Mets Ignited. Thank you for your presentation. It is really heartening to hear a positive story from an industry company, so really well done, congratulations. I'm very interested in how you, leading Evolution, are thinking about the mine of the future. We're told constantly about the introduction of disruptive technologies, and we see many Mets companies in this sector prepared to address this opportunity with the mining companies. So what are you doing as a leadership team in your organisation to plan for the future?
That's also a very good question. The one thing which strikes you when you walk onto a gold mine today is it looks quite similar to a gold mine 25 years ago. So we haven't yet really been impacted, or we haven't embraced the technological revolution which has occurred around us. Maybe more people have mobile phones at the time on the mine, but that's really about it. So I think there is going to be a wave of opportunity in terms of getting smarter, more efficient, and that could potentially lead to the next wave of productivity improvements. At Evolution, we've come off, or the Australian gold sector and mining sector has come off an unsustainably high cost base. We're now at a normalised cost base. Our costs came down 17% in Australian dollar terms last year. But the one thing you absolutely know in the gold industry is that standing still is not an option. So if technology is going to deliver that next leg down on productivity improvements, we need to embrace it. You know, an interesting, I suppose, lead into that is Barrick's announcement that they formed an association with Cisco. So I think it is starting to happen. We're probably slow adopters, but you know, we certainly think about it a lot.
Sam, over here.
Adrian Prendergast from Morgans Financial. Just wanted to look at Cowan in particular. You've really been able to demonstrate a lot more value than what maybe Barrick thought might have been there. Could you just talk us through the development and really the evolution of thinking of the mine?
So I think just bear in mind that when we bought it last year, we put in the bid, I think in April or May. Everyone said we overpaid for the mine. So it was in that context. It had 1.6 million ounces at the time. I think, and Barrick would agree to this, I suspect, that they'd been through a process where they were divesting of their assets for 3 years, really. So Cow had no exploration dollars spent on it for 3 years. A lot of the things we were implementing were certainly ideas which were on site, which had been attempted to take up the line, but had really not got any traction within the Barrick group because they were exiting. So very quickly we mobilised. We see that we're sitting on potentially a world-class deposit that has been underexplored. Barrick were kind of thinking we're going to close this mine in 2024. We've recently submitted an application to the government to a modification 13 that would see the mine potentially, subject to additional drilling and feasibility work, which we'll announce early next year, being taken out to 2030 or 2032. And it's, the mineralisation is not closed off. So it currently has 2.85 million ounces. We think we're sitting on potentially a world-class ore body.
We've got time for one more question. So last question over here.
Misha Collins from Ames Asset Management. Firstly, I wanted to thank you for the presentation. It was very interesting and intriguing. Particularly, I found it interesting that you mentioned Agnico Eagle and Randgold because recently at the Denver Gold Conference, those two companies really stood out in terms of differentiating their corporate strategy. And I guess my question is around the corporate side of things in terms of the strategy and how you can differentiate and what you might have learned from those companies in terms of particularly the ownership of the company that, in the case of Randgold, the management do own a good percentage of the company. But I'd be really interested if you could sort of talk a little bit more about that.
I think Mark Bristow, who's led Randgold for many years, they have outperformed the gold sector consistently for well over a decade. He has been relentless about his focus, about his strategy, and his implementation of that. So when everyone else in the gold sector was getting caught up by shareholders saying the gold price is going up, you need to grow, you need to do more things, why don't you merge with someone else? He just focused on his strategy. And same with Agnico Eagle. They didn't pursue acquisitions and grow the company. They've stuck to their long-term strategy and they've been consistent about the delivery of that. And I think that has really set them apart because if you look at some of the train wrecks that occurred post the 2011 fall off in gold when it reached $1,900 an ounce and then went back down to 1,000, most of it was caused by poorly timed acquisitions that needed to be unwound. So that means going to what I talked about. You have to invest on a counter-cyclical basis, and you have to do things differently to what your peers and competitors are doing. Otherwise, you'll end up in the same place as them.
Sorry, we are going to do one more question if you're up for it, Jake. One more question over here. Last question.
Brian Phillips, Jake. Your story gets better every time we hear it. Thanks. Jake, a lot of Australian flags on that map. Only Australian flags on your map. Is Australia the place to be despite everything we hear on the news every day, or are there other parts of the world that you think there could be good gold mines?
There's certainly other parts of the world where there will be good gold mines, Brian, but whether they're for evolution, I'm not sure. I think probably having spent the first 17 years of my career mining in China, I found that probably Australia is a great place to mine. I often do refer to it as God's gift to miners. We live in this vast, underpopulated, resource-friendly country, and there is, in our view, plenty of opportunity here. Costs have come right down and we are competitive, and I think if we can align ourselves with government, with other stakeholders, there is plenty more gold to be found in Australia.
Great. Thank you everyone for your questions. I'd just like to ask Swan CEO Lorraine Meldrum over to give a vote of thanks.
Evolution Mining under Jake Klein is Australia's well-entrenched number 2 gold miner. And with his plans to lift output, we will be hearing a lot more from Jake and about Jake. Evolution's performance has been and is strong on various fronts. The company has successfully A, reduced its all-in cost of production, B, increased production, C, broadened into copper, and D, won 3 great industry awards in 2016. It's certainly a case of watch this space. And Jake, may it be a beginning of a new era to have the Melbourne Cup made from Evolution's gold. Ladies and gentlemen, please thank Jake Klein. Thank you.
Thanks, Lorraine. Now, turning to some of the flyers you've no doubt noticed on your tables. the AusIMM has quite a few conferences scheduled, including the Mill Operators Conference later in October and the Open Pit Operators Conference in November.